for me, it's very interesting, even though it has got a lot of information, but you need to understand the basics, is what I always try, just to give the basics before we can continue. So I'm just going to write the heading here, bank reconciliation statement. I'm going to explain to you like you are a beginner. Eh? Don't feel bad and say, "Hi, well, how do you take me?"
No, that's perfect. That's perfect.
Yeah. But for me, I don't assume that someone has done it before. Because I know people have done it before. When I explain to them, they say, is it like this? I said, okay.
Yeah.
Yes. Bank reconciliation statement. Obviously, we're still reconciling. I think you know by now. When we reconcile, there are always two things. There are always two parties involved. You know, if we talk about us, two people must reconcile. Can you see two or more? The same applies to what we just did previously. We did the creditors recon. We were comparing in a way two things. They can also ask you for the debtors reconciliation. You're still going to compare things. It's all about comparing things and check what are the differences. And in most cases, those differences are temporary, because I don't think that the differences must be forever. So the same applies to our bank. Remember, when you talk about the bank, it's all about cash. That's why sometimes we call this cash and cash equivalent. Some books call it, this section, they call it cash and cash equivalent. In other words, it's where you deal with cash. And usually, cash, we need to record the cash that we receive in our books. I can talk about, let me write this, our business. When I talk about our business, I'm talking about our books. So this is what I'm going to talk about. Our business, I'm referring to our books. Obviously, if you are having a business, that business, you need to have an accountant, you need to have a bookkeeper who must take care of what? Of your books. That's a fact. So here is going to be our business. So if we relate this to what we just learned, remember our business was called We Fix. So meaning when I say our business, I'm referring to We Fix. That is our business. Okay, we must have our own books. Okay. But remember, when you register a business, they always ask you to open a bank account. That one they won't leave. They'll say, "Hey, do you have a bank account?" You must have a bank account. That's why you need to have a bank account with a financial institution. So I'm gonna talk about a bank statement. Remember, bank statement can come from any financial institution. Maybe you are using Standard Bank. Maybe you can use ABSA. These banks, I'm advertising them. They must pay me, okay? But I'm just giving. So obviously you need to have a bank statement from a bank of your choice. So I can call it Silvestish Bank. Hey, the future. Yes. So this is the bank where you must have a bank statement. Yes, you must have the future. Okay. So far, I think from your past experience, I think we know about what we call. Let me just do this. Subsidiary. Remember we subsidiary journals. Have you ever heard about them?
Subsidiary ledgers.
Journals.
Journals.
Yes. So we've got something called cash receipt.
No.
You learn them? There's something called cash receipt journal. We call them cash books. And then we've got the other one is called cash. Let me write it down. Cash payment. Because you can't do the reconciliation if you don't know how to compile the two. Can you see now? You've got the cash receipt journal and the cash payment journal. Okay? So when it comes to the cash receipt journal, is where we record the cash that you receive. Every cash that you receive, you record under what? cash
Cash receipt.
receipt journal. Are we together?
Yes.
But if you pay cash, we record under what? Cash payments journal. I want you to understand this too before we continue.
Mm-hmm.
So we call these our cash books. We call them cash books. Let me write it down. We call them cash books. Called cash books, or you can call them cash journals. It's okay. They are called cash books or cash journals. We together. Remember, in
Cash books or
business, yeah. So in business, remember, we receive cash, we pay cash, we receive cash, we pay cash. So when you receive cash, you go and record in the cash receipt journal. And thereafter, if you pay cash, you record on the in which book? Cash payment journal. In a nutshell, the cash receipt journal, we record all the cash inflows,
Mm-hmm.
and then the payment, we record all the cash outflows. So let me just write it down so that you can understand. So here we have got all the cash inflows, meaning the cash is flowing to the business. And then this other one here, we record all the cash outflows. Yes, so it's very much important to know. Okay.
Yeah.
So we call them together they are called journals, but we call them subsidiary journals. There are about 8 of them. Have you ever heard about debtors journal?
No, we actually didn't learn these specific journals in depth.
But why do they want you to do the bank reconciliation if they don't give you
That-
the journal?
yeah, that's
They
what I really
assume
asked
that
myself.
maybe they
Yeah.
assume that you did accounting before, you must know this.
Yeah, they did assume my group, I'm in a different group where it is assumed that we took accounting in high school.
No, I know that's unfair. That's unfair. But it's okay. We found each other, don't worry.
Yeah.
Yes. So this is what we need to know. We call this cash book. So remember, it's all about the cash. Here we deal with cash.
Okay.
Only cash that we receive and cash that we pay. But after compiling these journals, we call them cash books or cash journals, we must transfer them to the ledger. There's something called ledger. I think we spoke about it, I think, not so long ago. There's something called general ledger, and then general ledger is in this format. A general ledger is something like this. Some people call it a T account.
Oh yeah.
It has got a debit and this side is always a credit. Are we together?
Mm-hmm.
But in this case for bank reconciliation is because we're dealing with cash only. The only general ledger account that we're going to open is going to be the bank account. The bank account is only a general ledger account that we're going to open under the bank reconciliation. So it means when we compile these 2 cash books, they will ask you to open the bank accounts from these 2 cash books. Remember, I'm going to show you with an exercise. But from these books, we are going to record under the general ledger account, and this general ledger account is called the bank account.
Mm-hmm.
Are we together?
Yes, we are.
Yes. And we must know that a bank is an asset to the business. I think you agree with me.
Yes, I do.
So a bank is an asset. Write it down.
Mm-hmm.
A bank is an asset. even though sometimes it can be a liability depending on whether you've got a negative or a positive. But for now, we're saying a bank is what? Generally, a bank account is what? Is an asset.
An asset.
So the fact that the bank is an asset, where do you think this bank will increase when I receive the money? Where will I increase the bank? Debit or credit?
On the debit side.
So on the debit side is where I'm going to increase the bank. Meaning when I pay, I'm going to decrease on the
Credit
credit
side.
side. This logic is very much important.
Oh.
Yes. You will see it's gonna incorporate each other very well. You'll see these baby steps are gonna help us. So as long as if you receive cash and you see yourself recording that cash on the credit side in your books, just know that something is wrong. Because as per our rules, bank is an asset. An asset increase on the debit side and decrease on the credit side.
Oh, the credit side. Yeah.
Are we together?
Mm-hmm.
So if we have 10,000 in the bank, so it means we need to go and show that balance on the debit side. Can you see now? Let's say I'm just gonna say, for example, we received 10,000. I'm just gonna write it like this, 10,000. I'm going to see that 10,000 on the debit side to show that I received it. Are we together?
Mm.
But if I pay something, it means I will go to which side?
Credit.
On the credit side. Let's say I paid 5,000. I'm gonna put it on the credit side. So this is what I want you to understand so far. So if you paid, you're gonna go to the credit side. You can even see with our analysis here, it is going down. We receive is going up. So as long as I receive, I'll cap this side, debit side, debit side, debit side. But when I pay, I'll go to the credit side. Do you understand this now?
Mm.
But whatever I did here, it must also show on the what? On the bank statement.
Yeah.
Okay. So again, the bank statement, you will see the bank statement also has, I'm just gonna improvise here. It also has a debit and
Wait, sorry, sir. So you said everything that we did on the bank account, in our bank account, should reflect on the bank statement.
yes, because we assume that if we receive money, that money we go and deposit at the bank.
Oh, okay.
So when I
Oh.
receive 10,000 and I deposit at the bank, I expect to see it on my bank statement. That's why if I don't see it on the bank statement,
Mm.
I'm gonna go to the bank and query that and say I did deposit last week, but the amount is not reflected. Can you
Yeah.
see now? And again, some
Mm.
payments, in business we prefer to pay maybe via EFT. Sometimes we pay using our cards and things like that. Again, even those payments must be reflected on the bank statement. Are we together?
Yeah.
So according to us, whatever we have paid or whatever we have received must be shown on what? On the bank statement. Is that always the
Mm.
case? Is
Whatever.
that always the case?
No.
No. That's why we need to reconcile. What can be the reason why? Let's say, okay, let's talk about this one. I received 10,000 here. I was expecting to see that 10,000 on my bank statement. And that 10,000 is not there. What can be the reason practically?
Mm.
Because
If
there
I
are various reasons.
received, what
In
if
my book,
the bank closed early? I don't know.
maybe obviously if it's closed early, but you did manage to go to the bank. So let's say, for example, they said they're offline.
Oh, okay.
Yeah, obviously they will take the money, but the money won't reflect now. Can you see now?
Mm.
Those are one
Mm.
of the reasons. sometimes they normally, I know before, I think now they improved, before when you deposited using the ATM, the amount would not reflect immediately. I think nowadays they changed the system. If you deposit immediately, it shows. But before, when we used to deposit at the ATM, it will take maybe a few hours before it reflects.
Yeah.
That can be one of the reasons.
Okay.
Sometimes you deposit a check will clear after certain days. Can you see now? Sometimes you transfer from Standard Bank to Capitec. Maybe they are not participating banks. Sometimes they say it can take 3 days, sometimes 1 day, sometimes 24 hours. So those things can be the reasons why we have got the differences. That's how we need to reconcile them. Are we together?
Yeah.
Yes. So like in this case, I know that I received 10,000 in my business. I went to deposit this 10,000 there. I was expecting to see that 10,000 here. If I don't see it, I'm going to reconcile it. But I'm going to show you how to reconcile. I'm just giving you the theory for now.
Okay.
Now, for now, if everything goes according to the plan, so this 10,000 that I received must be shown on the bank statement. So this, I'm just going to write it as what? As a deposit. So I had deposited this money. How much did I deposit? Obviously, I deposited how much? 10,000. So I must see this 10,000 on the bank statement. Is it on the debit or credit?
On the credit.
On the credit, I agree. Why?
I don't know. I'm using the logic of the of the other question.
I get you. And of which is the right thing to do, but I want you to understand it. It's because on the bank statement, remember, let me use the future bank in Africa, which is going to be Silvestre Bank. I'm just going to give an example. I don't want to advertise anyone's bank here. So your bank, you've got a bank account at Silvestre Bank. So Silvestre Bank gave you an account. That's why now they're giving you the statement. So yes, it will be on the credit side. Why? Because under Silvestre Bank, do you know that Silvestre Bank is also a business?
Yeah. Okay.
They must show that they owe your business 10,000. So this 10,000 does not belong to Silvestre Bank. It belongs to our business. Can you see now? So in Silvestre Bank, they must show that they owe you, meaning they call you a liability. Do you understand that? Where do liabilities increase?
On the credit side.
That's why you are being credited on the bank statement, because that bank owes you. But in your books, that is your money, is your asset. Can you see now?
Yeah.
In our books, it's debited. On the bank statement, is credited, because we've got two different businesses. It's similar to what we just spoke about. Remember, under Creators Recon?
Yes.
The other side is debit, the other side is
credit.
Yes, the same logic there. So the bank owes us 10,000. That's why they say we are their liability, they credited, but this is our own money, it's our asset, we debited. So it's like that system called double entry system. One account is debited, the other one is credited. Are we together?
Yes.
So now let's talk about that other payment. Obviously, this payment I expect it to appear on the bank statement. Sometimes this can, let me just write it as a debit order. Let's say this payment was a debit order. Let me not call it a debit order. Let me just call it the payment, because I want it to make sense to you and challenge you a bit. Payment. Where do you think I must put that payment? Which side?
We put it on the debit, because now it's like we owe the bank. I mean, yeah,
Yes,
something like that.
that's true. Get it now? I want you to understand this logic. That's the first thing that you need to understand, so that by the time when we record, at least you remember this basic.
Oh, okay, yes.
I remember I had a long conversation with one of my groups long time ago because I was saying in class, hey, bank account increase on the debit side. When you receive money, put on the debit side. Those people were attacking me. They say, Sylvester, you are lying. And I understood why. Because they always know how to read the bank statement.
Yeah.
Yes, but I ended up winning them and saying, oh, they said, now we understand. Because when I was saying debit on they said, no, Sylvester, man, why do the debit orders on our bank statement? When it's a debit order, money goes out, and then now you say a debit, we receive money. I said, no, I'm not talking about the bank statement from the bank. I'm talking about the bank account I opened in my books, not the bank statement. Can you see now? So after that, they understood the logic.
Mm.
So
No,
I
yeah.
would be happy if you understand the difference between the two.